I don't know you all yet, so and we got quite a packed agenda with some really interesting reports as well. So we will get on with the agenda, and hopefully by the time we get to the accounts, we will be correct. Are there any apologies for absence, Craig?
Yes, thank you, Chair. I've had a few apologies received. So apologies received from Councillor Rose Martin from Walsall, apologies from Councillor Jaspal from Wolverhampton, but we do have her substitute, Councillor Sally Green with us, and also apologies from Councillor Carol Dean representing Staffordshire non-constituent authorities, but we do have her substitute this morning, Councillor David Foster. So thank you both for joining.
Excellent, thank you. Are there any declarations of interest? No? Okay, so on to the agenda then. That's in remarks from the chair. Just a couple of things from me. At the Overview and Scrutiny Committee, members expressed some concerns around the implementation of the procurement module on Unit 4. And just wanted to assure members as well, it's not an implementation of a full IT system, it's just the existing Unit 4 system with a procurement module to enable us to meet the new requirements of the Procurement Act. Now, Louise has assured me that work is going on, and also I suggested to you that maybe contact Peterborough City Council, who are dealing with exactly the same. I always think safety in numbers and speaking to others is helpful. Have you spoken to them yet?
Not just yet. I think it's scheduled for Thursday. It's arranged. So I will be speaking to Julian on Thursday.
That's excellent. Thank you very much. Maybe we can have that as an action, that we can get some feedback and hopefully then have the mitigation for that particular risk in the at the future meeting.
The implications on just gone to the toilet.
Okay. Excellent. That looks to be looking the other concern that the Overview and Scrutiny Committee was around cyber security, and members wanted to see some assurance around that. I have contacted an ex-police team from City of London Police to see whether they will give us some. They're the expert in cyber security, and I've worked with them in the past, and they provided some very good training, and they're very keen to work with us. So I'll put you in touch with a relevant person to see if we can get some of that excellent training as well. I think that was all I wanted to say from the chair. So we move on to the minutes of the 15th of September. Are there any issues with the minutes? Everybody happy? So far? Okay, matters arising. Have you got any matters arising? I have none. Oh, excellent. So over to the action list then on page 9. I think we only got one outstanding action there, and that is around the apprenticeship levy and making sure that we appropriately use the government funding. Now, I have been advised that this action has been referred to the Overview and Scrutiny Committee, who will liaise with me and feed back to this committee in due course. So that is on track to be delivered. Is there anything else, officer? There's nothing else outstanding. Right. Then over to the work programme. I think that's pretty straightforward. Hello.
Good morning. My apology for being late.
Good morning, and no problem.
Thank you.
Any comments, issues with the work programme? No? No? Anything?
Yes. Oh, thank you.
So that leads us very, very nicely into the annual accounts. Is that you, Claire, or Louise, or Louise? Yeah.
Good morning, everyone. And for those of you that I've not met before, I'm Louise Cowan. I'm the Combined Authorities Head of Financial Management. I'm not planning to say very much. I just want to introduce the accounts, actually. And so in your packs, starting on page 21, is the Combined Authorities Statement of Accounts for 2024-25 for the committee's consideration this morning. Their production is a huge undertaking. I think it's like 130 pages altogether, with an initial draft that was published on the Combined Authorities website on the 27th of June, in line with the accounts and audit regulations. They were also shared with members of the committee in early July. So the audit of the accounts is now substantially complete, and the Grant Thornton team are anticipating issuing an unqualified audit opinion in December, and any further changes that are required before the final version of the accounts is published. The report actually seeks the authorities delegated to the chair to agree any further changes on behalf of the committee. And that's all I wanted to say, really. So I'll pause there. Happy to take any questions.
Thank you very much, Louise. And can I just say from the chair, I think you've done a fantastic job, Claire and Louise and Rachel. Many local authorities would be very jealous of being where we are with meeting the statutory deadline and getting the audit opinion within the statutory deadline. It's a huge achievement. So I think congratulations to the team really for doing that. We not quoted. Are we quoted? No. So we're not going to be able to sign the accounts off today, but we will scrutinise them, and we will then make a recommendation that the board will approve the accounts in January. We had training last week from Elizabeth Humphreys, who went through the accounts, and some of the members here attended that training. I know it's a little bit daunting when you get a report like this, full of numbers and very strange entries. With the public sector accounts are very different from private sector accounts. So I think it was very helpful to have Elizabeth going through and identifying the kind of key areas you need to look at and the areas that you don't need to look at all. So I think we've got some questions for you, Louise. And I think just starting from me. Starting from the chair, in the comprehensive income and expenditure statement, there is an increase in both income and expenditure for transport services, as well as combined authority wider services. There's also a big reduction in the investment programme. Are you able to explain why that is?
I'm just going to hand over to Rachel Teo, our Group Financial Accounting and Reporting Manager.
Hi, yes, this is my first time using this microphone. So this is largely due to the increase in RAFCAS, which is revenue expenditure for capital under statute. So whereby we provide or we have capital spend, which is capital in the respective recipients' books. So technically an asset for them. This is due to that one, and also there's associated grant funding. So if you can remember, Commonwealth Games Legacy Enhancement Fund, we have received quite a lot last year, and its final year in 24-25, hence the increase. Similarly with UK Shared Prosperity Fund, which is to do with I think the net zero element, and crust funding. I'm sure you're familiar with the crust funding, as well as we've received new grants in the year, which is in relation to Network Stability Fund for transport of 28 million, and we've also received from MHCLG investment zones we've recognized about 2.2 million. So you can see the big increase in terms of grants being recognized in note 10. of the accounts. Separately, in terms of investment program, the reason why it is a decrease is largely due to a lot of the projects having fully utilized their investment program funding allocation. However, one of the big funding project is to do with Coventry City Centre regeneration scheme, which currently at the moment it's being delayed. So we are foreseeing that to gain momentum in 25-26. So possibly there'll be an increase in terms of investment program income and expenditure in that respect. Thank you.
Excellent. Thank you very much, Rachel. Any other questions? Green?
Here you go. So question, there's 20 million increase in the net income on the financing and investment income expenditure. Can you explain how this is linked to the Treasury Management report in today's agenda, please?
I'm just going to hand over to Mark Finnegan, who's our lead Treasury accountant.
There's no direct link between the increase in that shown in the accounts and the report later today. The report that's on the agenda today is for the financial year 25-26, as the accounts for 24-25. But in terms of the increase itself, we can unpack that a little bit. Of the 20 million, approximately 9 million relates to an increase in investment income. So our portfolio across both the years 23-24 and 24-25 was about 900 million pounds or so. But the interest earned in 23-24 was 3.7%, and the interest earned in 25 was 4.7%. And that 1% increase as the Bank of England tightened monetary policy resulted in a 9 million pound gain of investment income across the 2 years. The other large area of the increase is a modification gain that happened when we restructured our loan with the Phoenix Group, which amounted to £6 million. So on the restructure of that loan, we recognised the benefit of the entire loan under accounting regulation immediately, but that's amortised back over the lifetime of the new loan later. So the £6 million goes to general fund balances, but has to be amortised back in interest costs over the life of the loan thereafter. In addition, the increased drawdown of collective investment fund loans to third parties during the course of the year resulted in an increase of £2 to £3 million as well. So more loans going out to third parties, more interest being accrued as a consequence. And that takes care of most of the 20 million.
I paid last one.
Yes.
So on the balance sheet, there's a significant increase in property, plant and equipment. I think that may be linked to some of the funding streams that were mentioned earlier, but can you clarify exactly what it represents?
Rachel, are you okay to pick this one up?
Hi, the increase in PP is largely due to metro extension schemes as the West Riverley Hill extension gained momentum. We're hoping to complete phase 1.
Getting in the queue for the question.
Yeah, we're hoping to complete.
Switch yourself on.
We're hoping to complete the West Riverley Hill extension phase 1 this year, but depending on the delivery of the project. Separately, we've also purchased Stratford Gateway. That's in respect of new homes to be developed. So we've acquired the land in this year. That's part and parcel of the housing grant that we received. And separately, we're gaining momentum in terms of Dudley Interchange, which commenced late last year and therefore going through into late 23-24, going through into 24-25, and then more so in 25-26. So that's the main reason for the increase in PPE.
Thank you.
Thank you, Rachel. And also a supplementary question from Councillor Woodall.
To a certain extent, yes, Chair, thanks. And it's in connection with some of the remarks Rachel made in her opening address. You said that you have had an underspend on the Coventry Town Centre scheme and City Centre scheme. Apologies for colleagues if they are from Coventry in the room. It's a city, not a town. My apologies. I just wanted to make sure that not so much for this account, but for the financial plans going forward, that you've got a timescale for recouping that and it's been measured, and you've got a transparent plan for making sure the funding for that particular project is going to be implemented and spent.
Yeah, Yes, I believe so. So this is managed by the investment program team and they are closely monitoring the progress.
It's on the way. Our citizen center is to go.
Yes, councillor Peter?
Thank you, Chair. Just revisiting the balance sheet. There's an increase in short-term debtors. Sorry. Does this mean that we're not as good as collecting outstanding debt as we were last year?
Answer that. Actually, that is mainly due to the really large invoice to Birmingham City Council of 18.9 million. That's to do with the funding for Digbel Public Realm project, which is within part of the metro extension schemes. So that's hence the massive increase. But you'll be glad to know that we've actually received the money in May 2025. So we've got no issues there.
I have to go back to shout at everyone.
Thank you. Councillor Green.
There you go. So, on the movement in the reserves, page 63, there is 56 million movement in earmarked reserves. Can you explain what this relates to? What's the difference between earmarked reserves and the general reserves, and are both these funds useful?
Please. I'll take that one. So the movement in reserves statement, as you said, does show a movement of 56 million between the 1st of April 24 and the 31st of March 2025. And earmarked reserves are set aside for specific purposes. So that includes projects that were ongoing at the end of the financial year. And the breakdown of the 56 million is there's 16.8 related to housing schemes, 13.9 million related to transport schemes, including bus franchising. Members will be aware there's work underway on bus franchising at the moment. Transformation costs and corporate efficiencies of 8.1 million, capital financing costs of 8 million, and unapplied revenue grants. So that's where we've received a grant, but we haven't spent the money yet, of 5.8 million. The Mayor's priorities, 3 million was set aside to support the delivery of the Mayor's 4 priorities, and also £1.5 million for creative industries. So both earmarked reserves and general reserves are classified as usable reserves. They can be used, but general reserves are more of a cushion against perhaps uneven cash flow or unexpected expenditure. So they're not for specific purposes like the earmarked reserves are, if that makes sense.
Thank you. Just back to sort of the transport services and bus franchising, just a quite a general question. So is it going to be on budget? Just what's your sort of views and opinions on how the funding structure has gone so far for the bus franchising?
It's been considered as part of the auditor's value funding assessment for 24-25, and we recognise we've got more work to do in that space because it's very new territory for us, but we've got a close eye on bus franchising plans. And if you want to add anything, Claire.
Yes.
Thank you, through you, Chair. So yeah, just to build on what Louise said, at the moment we've got specific money set aside for the transition work, the bus franchising, close monitoring of that, dedicated person in my team supporting that work at the moment, and the whole sort of steering group set up for that. At the moment, everything is on track to be within budget and on time scale. We are looking at specific allocations within the budget to make sure we've got all the resources we need, particularly skills we need, when we need to bring additional capacity in. But everything's moving okay at the moment. There will be further updates to board as we go forward. We're looking at the fleet strategy, for example, will be coming up soon, and then further work in the coming months. So there'll be lots of reporting on that as we go forward. And everything's going the right way at the moment. And it's also linked to the review of our transport budget allocations as well through Rosewell review. You might have come across there's a report to board last time, and another one will be coming in New Year as well, looking at how we use our capital funding to support the bus franchise work as well. But yeah, it's on track at the moment.
Excellent, thank you. Yes.
Thank you. You mentioned about the mayor's priorities. I've got no idea what they are. I don't know if any members of the committee or anyone in this room particularly knows what the mayor's priorities are, but you were saying there was £3 million for the priorities, just what's that going to actually be spent on?
I don't think there's any specific plans at the moment, but the 3 million has been set aside specifically for journeys for everyone, homes for everyone. Am I going to remember all these?
No pressure.
Growth for everyone. Yeah. So those are the mayor's 4 priorities. So there's 3 million set aside to support their delivery. Yes.
Apologies, just that those 4 priorities, £3 million is a great deal of you might call discretionary funding. I'm assuming that's for special projects and for one-off activities to supplement the broader agenda, not just general funding.
Yes, absolutely. It won't create any commitments beyond the 3 million. So it is one-off. Yeah. Yes.
I suppose just to go to general fund reserves again. It says here increased from 6.4 million to 9.4 million. Is this a general good thing, and is it adequate enough for the general funds reserves? How is it calculated?
You, Chair. So yeah, you're right to observe we increased the general fund at the end of last year, and that was because we had some underspend and we had the opportunity to increase it. And this is a move in the right direction, in my opinion. That brought us to around 2.3% of our expenditure budget, which there's no right or wrong with the level of general fund, but it's sort of well accepted that somewhere between 3 and 5% is good practice for a general fund reserve. So we are trying to move towards that. I'm working on a holistic reserve strategy at the moment alongside the budget process, and we'll bring that to Combined Authority Board in February with the budget, and we'll show there how we are intending to increase the general fund over time, and an opportunity again at the end of this financial year to look at any underspends, because we are forecasting underspend at the moment. There might be opportunity to increase at the end of the financial year as well. So yeah, moving in the right direction, but we need to get it a little bit higher, I think.
Thank you, Claire. Just on that, reading the audit opinion, they are concerned about the low level of reserves. Are you concerned about it, or are you satisfied they are adequate?
So to answer your question, Chair, in terms of general fund, I do think we do need to increase it, but we do have other earmarked reserves, and Louise has just told you about some of those to manage specific programmes of work or specific risks that we're aware of. So overall, I believe they're adequate. The reserves strategy that we're working on at the moment will help to demonstrate that, show how we're using reserves to manage both investment priorities, where we might want to do one-off things to make improvements or investor save type projects, how we use reserves to manage risks, how we use reserves to smooth different cash flows, for example, treasury, where you might get ups and downs over a span of years, and how we're setting aside money for general risks in the general fund reserve as well. So I think that work should help to provide assurance to board alongside the budget that we do have sufficient reserves and adequate to sign the budget off in February.
Excellent, thank you. Yes, Councillor Bickler.
Sorry, final question from me. I think last year we it was suggested that to meet the expenditure there could be a mayoral precept. Is that still being considered by the authority?
You, Chair, there's no plans for mayoral precepts at the moment, and plans to balance the budget next year don't include a precept.
Thank you, Claire.
Thank you, Chair. First, my apology being late. It wasn't my fault. The train was late. So I'm missing at the moment. I didn't have the paper with me, hard copy. Usually I usually read it and mark it. I'm trying to figure out where I read something. So that's why I'm clicking around. On both questions, first, the general fund reserve. I remember asking that question before. Probably Louise can remember remind me. What is the ratio which is right for being having a reserve funds of a budget? 10%, 3%, 2%, 0, any percentage, how we can feel safe that then we have to have, auditors gave their opinion, fine. We should adhere to it. But the question is how we assess it. Is there any formula on it? That's the first question. And secondly, I think the question was asked on the mayor's stuff. I think I read that's where I was struggling to find in the papers at the moment. There's on mayor's precept, there was a note which was saying the board failed to support the proposal. I think this is a very wrong wording. Board didn't fail actually. Board actually rejected it. I remember that because coming to the committee, probably you remember, I raised it first here. That this will go on the council tax. People are not going to pay for extra. And certainly I was told later on the board rejected it. So it wasn't that board failed it. Board actually rejected it. The wording need to be put in order because this is not board's fault that they failed. They actually rejected at that time. Sorry, I just took extra time.
Yeah. Thank you. So in response to the first question about the general fund reserve, there's no set formula, but it is considered best practice in the sector to have somewhere between 3 and 5%, and most local authority sectors and combined authorities would aim for something like that. Because of the nature of our funding, because it's a lot of grant funding, we work different to local authorities as well. The nature of our risks are different, so we have to weigh it all up. We have to look at our earmark reserves and look at potential risks we're facing, how much we've got set aside. So ultimately, it comes down to Section 73 recommendation, which is with me. So it becomes down to my recommendation to board, my view of the robustness of the budget, the understanding of the risks, short and long term, and the adequacy reserves, and that is my role to provide that advice to the combined authority, which I will do as part of this reserve strategy. But it is my thinking that we should aim to increase the general fund in the direction. But I think the auditors would recognise that we do have other earmark reserves, and I think they've referenced that certainly in the past as well. So you have to look at looking around and judgment about what you put in which reserves ultimately.
Can I?
Yes.
I completely agree. Your judgment. That's where I don't disagree with it. I had the same problem before. I'm just trying to find the answer to it. 3 to 5. Where does the guidance come from for 3% to 5%? Because I remember some years ago, if I had that kind of understanding, but I just seem to be disappeared. So I'm trying to understand. We should have some kind of guidance from somewhere, that we should have a 3% or 5% or even 10%, whatever. So some source of guidance, that's what I was after. Thank you.
You, Chair. You're absolutely right. CIPFA did used to suggest 5%. It's my understanding they no longer do that, and it's local discretion. So I don't think you'll find, unless it's happened recently, I don't think there was any specific guidance out there from our regulatory bodies or otherwise, or indeed external audit. It's more of a judgment, but it's just what has become best practice in the sector, and I think and we sort of peer and benchmark against each other in that respect. But there is no set formula, which would make our life easier. I do agree, but there isn't. So
I wonder whether I can just add to that as well. The CIPFA used to issue statutory level of reserves, which was 4%. You statutory, you had to have 4% in reserves. That changed, and it became more around setting the level of reserves around a risk assessment, which Claire has quite rightly said. It's the CFO who makes that judgment. I think it's important to recognise the difference between the combined authority and a local authority as well. The risks are quite different. Whereas in a local authority with social care, you can get huge variances just with 1 or 2 cases, whereas the risks are quite different from the combined authority. So from an accountant point of view, I'm quite comfortable with where we are, but it's useful to have that debate.
Thank you.
Any further questions, comments? No. Yeah.
I wonder if you would ask the Synod just to go through their findings. Might be
Oh yes.
helpful.
Yes. Over to you.
Thank you.
Sorry, can somebody explain the wording which I mentioned in the document? Somewhere I read it, but I can't find in the case I saw on the screen at that time. It may have precept somewhere. On the screen, I think it was the page 48, but I don't know, that's how I made my little book. It says board failed to support the proposal. I think it sounds as if the board is useless. So I'm just trying to make sure it's in right order.
Yes, we can change that word in.
Yeah.
It's probably not the best choice of words, so we can
Yes.
change that word.
Please, thank you.
Thank you, and over to the auditors.
Thank you very much. And just to introduce myself, I'm Zach Francis and I'm the Senior Audit Manager from Grant Thornton. And I've brought with me Jack Harris, who's the in-charge auditor who leads the on-site audit team. Just to echo Louise's opening remarks, really, the audit is nearing completion and this audit findings report notes our findings to date. There aren't a substantial number of areas left open on the audit, and we do intend to close the audit by Christmas, by the Christmas break, which is very good in the current landscape of local government audits, and the government's own backstop date for local government audits is February 2026, the end of February, so we're ahead of that. In terms of how the audit's gone, we have no material issues to report to you, which again is really positive. But our audit findings report touches on non-material issues as well. But I just want to draw out that it might be cluttered with findings in there, but actually there's nothing material in there for you to continue with. Significant risks for the audit, which we set out in our audit plan. It's a risk-based audit, so we identify what risks there are for any particular audit client, and we're required to report to you our findings against those. We had two for this audit. One is a presumed risk, which applies to all audits, and that's for fraud and management override of controls. And we didn't identify any instances of that, as you would expect, but we did have some control improvement recommendations to make for management to consider, and later in the report you can see their responses to those recommendations, which they've taken on board for the future. The second significant risk was with the pensions liability, which is a massive figure in the authority's accounts, albeit it is reduced to zero in an unusual kind of accounting adjustment, which is required because it becomes an asset, or it became an asset in the last couple of years, and the accounting standards require the authority to cap that asset to a nil level. So our work on pensions is substantially complete, and we had no material issues to bring to your attention. Just a couple of outstanding points there to finalise before December. In terms of other areas, grant income is huge for the combined authority. It's a big area of income. So we do a lot of work around grant income, and there are some findings that you'll note in the report, and some adjustments that will be made to the final set of accounts. Apart from that, like I say, no material issues. Good set of accounts that we were presented with back at the end of June. So now it's just over to kind of working with management and the finance team to finalise everything before the Christmas break. Thank you.
Excellent, thank you very much. And reading the audit opinion, I think is very, very positive. So thank you for such a good report and such a timely report as well. So much appreciated. Any questions? Any auditors? No? Okay, so we have a number of recommendations in the covering report for the accounts. So we take the recommendations as read. We're not recording that. So the recommendation stands that this is referred to the board for their approval in January. Agreed. Excellent, thank you. Right, so that's the accounts out of the way. The next agenda item is the internal audit update. Matt?
Thank you, Chair.
I think it's that.
There we go. Okay, thank you. So the purpose of this report is to provide the committee with an update on internal audit activity since the previous report in September 2025 and to outline progress against delivery of the 25-26 internal audit plan. The update also highlights key areas of focus and any emerging risks or challenges impacting delivery. Since 2025 September, internal audit work has concentrated on three main areas: the completion of mandatory external grant determinations, the progression of audits within the 25-26 plan covering the core assurance areas contained within the plan, and reactive and counter fraud investigations. In addition, the internal audit team has continued to play its role in supporting key corporate projects by providing consultancy and governance, consultancy on governance arrangements and advising on the effective implementation and application of internal control. During the reporting period, 1 core audit and 5 grant audits have been completed to final report stage, and this represents 28% completion of the 25-26 internal audit plan. The team currently remains on track to deliver the plan within the agreed timescales. However, it's also important to note that ongoing resource pressures, particularly arising from reactive investigations and counter-fraud activity, are impacting upon the plan. And whilst these activities are essential to safeguarding the organisation and its integrity, they do inevitably divert capacity away from planned assurance work. Should these pressures persist or escalate within the year, there does remain a risk that delivery of the full audit plan could be compromised. If that was going to be the case, that would be brought back to this audit committee and any revisions to the plan would be presented for approval. Okay, so in terms of the internal audit update report at Appendix 1 on page 257, Table 2 provides a summary of the internal audit work undertaken since the previous update. As mentioned previously, 1 core assurance audit was completed within this period, which was corporate credit cards, and also 5 grant audits were completed within the period. In terms of corporate credit cards, a review was completed and carried out to provide assurance on the effectiveness on the management systems and controls in place in relation to the combined authorities' corporate credit cards. An overall opinion of reasonable assurance was provided, with 5 medium recommendations being identified where improvements could be made and for action by the department. These include a lack of a standalone corporate credit card policy, a lack of documentation of standard operating procedures for managing the processes and controls in place for corporate credit cards, lack of a current log maintained to record new card holders, amendments to card holder details and deleted card holders, and VAT not being applied appropriately in all instances. Section 4 of the report mentions changes to the internal audit plan. So as with the nature of evolving risk and the allocation of internal audit resources, it is sometimes appropriate to make changes to the internal audit plan. We review the plan regularly to reflect those changing risks and also the objectives of the organisation. Since the last update, 2 audits originally included in the plan have been removed and replaced with assignments that address higher risk areas following discussions with the relevant risk owners. These are policy support due to changes in the risk landscape within people and culture, and the fact that policies were not yet ready for review. The policy support audit has been replaced with an audit of employee relations casework management. And secondly, the Youth Trailblazer grant. Owing to delays in the grant funding for Youth Trailblazer, this audit has been deferred and replaced by adult skills supply chain management, which represents a high risk area for the organisation. And section 5 of the update report provides detail on follow-up of previous audit recommendations as at the end of October 2025. We do still have outstanding recommendations in relation to Longbridge Park and Ride, change control, cyber essentials certification, TFWM customer facing digital transport systems, infrastructure for zero emissions vehicles, and the key financial services audit accounts receivable for 24-25. I won't go into any more detail than that, but I'm happy to answer any questions.
Any questions for Matt? Yes, Councillor Woodall.
I'll follow this one under on because you're probably expecting it. A 28% completion rate on an internal audit at this time of the financial year looks a bit low. And if it was my authority, I'd be wanting some reassurances about that. Can you give us enough assurance to say that you'll complete your audit tasks to the full amount by the end of the financial year? Just the
Thank you, Councillor, and it is a really good question. I think firstly, in terms of when we look at the internal audit year, it is not directly aligned with the financial year. So as we audit to the end of the financial year, all of the audits within the within this year will not be completed by the end of March 2026. Again, just due to the nature of we are providing assurance over the entirety of that internal audit year. So some of that will be reported probably to the June meeting of this committee. So obviously that brings back that percentage completion rate. Also, the nature of internal audit work is that a lot of work is back-ended, because if you look at the table, section 2, there's quite a lot of work underway on quite a few audits within that audit plan, albeit they are at various stages of completion. So what you generally find is that within Q3 and 4, you see a larger amount of audits coming to this committee to be reported upon than we would see in quarter.
Ellen?
Thank you, Chair, and thank you, Matt. I don't think it's worth commenting because this is a service for which I'm responsible, but we are in discussion regularly, Matt and I, about the impact that the whistleblowing investigations has had on his team's ability to continue with business as usual, as it were. And we recognise that given the growing number of complaints that we've had to deal with, we need specialist investigation support to tackle that so that the auditors can actually get on with their business as usual. So we are aware of it. We are doing our very best to meet it. But can I give you categoric assurance we will do all of them? Absolutely not, because I've said to Matt it's really important that the auditors are not stretched so thin that they're not able to do a proper job, or we're not expecting more out of them than they ought to be giving. So it's something we're alive to and we're dealing with it.
Can I say as well, I share your concerns, and Matt and I have discussed it as well. I would be very supportive of any kind of bid for additional resources. I think internal audit is very, very important within the organisation. And I think also we can look at the possibility of buying in some services as well, the kind of expert audits. It's extremely difficult to recruit internal auditors as well. So it's trying to fish in a very, very small pond.
We have actually succeeded in getting a small amount of additional resource to bring in some temporary resource, so we can see whether this is an ongoing issue or whether it's something we're likely to need on a permanent basis. So Matt is busily trying to find someone who has got those investigation skills, so hopefully the situation should improve.
That's excellent. I know Oxford City Council provide a fraud investigation service, and they have a core. I was going to email you, but I can't actually get into my emails yet to send an email. But I can introduce you to Oxford City Council and see whether the service they're offering to a number of local authorities to sort of, and then you can look at it on a temporary basis and see whether it works or whether it can be a longer term solution. Any more questions to Matt? Yeah.
Just I'm lost in the papers, to be honest, sorry, Chair, because I read on the screen to some degree, so I'm not sure where it is. Just a clarification, Matt. That's all. It is not bigger issue. On I think there was saying on page 254 on the internal audit, section 1.3, 1 core audit and 5 grant audits. I didn't understand the grant audit. Simple as that. That's why I thought that asked.
No problem, and thank you for the question. So what we have within the audit plan is we have the plan which was approved within the July meeting of this committee.
Yeah.
That has the majority in there is core audits for the year. So those are audits where we have looked at the risks of the organisation, and we've discussed that with executive officers. And we've proposed a plan of audits which we believe provides assurance over those high risk areas within the organisation. Alongside that, we also as an organisation receive, as you're aware, quite a lot of grant funding. Those funding bodies often will write within the terms and conditions of that grant funding that they have to be provided with assurance from the Chief Audit Executive, myself, and also the Chief Executive of this organisation, whether we have spent the funding in accordance with those grant terms and conditions. So what we do is we provide basically an audit of that grant funding. Have we complied with the funding criteria set out within the grant funding letter and the terms and conditions? And we will then provide that to the grant funding body. So it's similar, very similar to an internal audit, but it does not go into the depth of internal control testing that a systems audit would.
Thank you very much. Understood. Thank you very much. Yes.
Thank you. Just a very detailed question for me on the corporate card report. There are some weaknesses identified that would be very easy to put right. Has that happened yet, or?
So in terms of the corporate card audit, the update, I guess, for the recommendations will be provided to the next meeting of this committee because it is only just being published. But you are right in that quite a few of the recommendations made within that audit are quite simple, or you would think would be quite simple to implement. I understand that they are ongoing at this moment, but I'm happy to provide an update after the meeting. And again, if we want to have any discussion about the particular areas of that corporate credit card audit, there is a private appendix as well in relation to that in more detail.
Yeah, that's great. Thank you. Okay, thank you, Matt. Next agenda item is the updated whistleblowing policy. Is that you again, Matt?
It is. Thank you, Chair. So a bit of an executive summary on this one. So whistleblowing refers to the confidential reporting by an employee, worker or individual engaged by the combined authority of concerns related to suspected wrongdoing, malpractice or risk that may affect the integrity of the combined authority's operations or those working within it. This report seeks the approval of the updated combined authority whistleblowing policy from the Audit, Risk and Assurance Committee. The combined authority has established whistleblowing arrangements and a related policy document that has been in place for a number of years. The current policy and related matters were last reviewed and approved in 2018. The policy document has been reviewed and amended to improve its narrative clarity, ensure that it is visually consistent with the combined authority suite of corporate policies and is aligned to both whistleblowing legislation and best practice guidance. The whistleblowing policy applies to all individuals working on or on behalf of the combined authority, including permanent and temporary employees, agency staff, consultants, contractors and subcontractors. The updated policy will be published on the intranet, internet and recirculated to all senior officers for cascade throughout the organisation following its approval. I don't have much more to say about the policy, but I'm happy to take any questions.
Yes, Councillor Racker.
Thank you, Chair. I just I thought just to ask, so I know we approved last year as well, the whistleblowing policy, I think. I do remember the policy going through and we approved it. I'm just trying to understand what's the difference in it, anything new in it.
So I think what we did last year, Councillor, is we brought an update in terms of whistleblowings generally. So we discussed what whistleblowings, every 6 months to this committee, we bring a report on an update on the whistleblowings which are active and which have been investigated up to that point in time. I don't believe that the policy itself was approved last year. Again, I could be wrong, so I can look back through that, but I don't believe it was. In terms of the updates, generally, it is just to align it with the current legislation and the best practice guidance. I don't have an exact update in terms of what was amended, but it was really just in terms of clarity and some best practice in there.
That's fine.
Okay, thank you. Thank you, Matt. So that was just a note, wasn't it? No, that was the three, wasn't it? Yes. All in agreement? Thank you. You approve, yes. Yes.
Sorry.
Excuse me. Thank you. So the next report is the quarterly risk reporting, and that's over to Peter.
Thank you, Chair. Yes, for those of you who don't know me, I'm Peter Schroeder, the WMCA Risk Manager. Those who have been here before, you'll know this isn't a standard quarterly risk update. This paper sets out discussions that I've been having over the last 6 to 7, 8 months with the executive board and others to sort of look at how we can sort of improve our risk management across the WMCA. So the two main things that this update explains is how we've approved a proposal for enterprise risk management. So how might we start to ensure that we're capturing the range of risk information and evidence across the organisation, and how does that start to coalesce and move through the organisation in order to provide a top level view of what are the significant concerns that we face. And so that was sort of talking about sort of how we might separate our risks into operational and delivery, and I've sort of explained some of that in the paper. So operational being sort of all of the resources we need, the people, money, our information management, our sort of compliance and legal activity, etc. And the other being, now we've got all that in place, we need to deliver things and we need to deliver what we said. So what are the risks to those deliveries? So that was the sort of the broad idea around enterprise risk management, and then sort of what structure will we need to make sure those risks can start to sort of move through the organisation. The next part then was a conversation around the strategic risk register. You should have received an update on that back in sort of August, September time. That never happened because we were really sort of contemplating exactly what we needed at the sort of that sort of higher level executive board reporting. And actually it was agreed that we would move away from a strategic risk register and move to a corporate risk register. That isn't just a change in title, that's not just sort of semantics, it really is trying to sort of focus away from a strategic risk register, which I think probably felt as if it had grown sort of large and a bit too sort of broad, couldn't quite get a handle on what some of those sort of risks were or what sort of control activity could really work. Some of those risks stayed around for quite some time. And so you'll see that what we're now proposing is that we'll have a corporate risk register which will sit at the top of a pyramid of information, so that enterprise risk management approach, in order to sort of feed in what are those sort of big sort of corporate concerns, either to our operational ability or our sort of capability to deliver. But there was a view that we should still have sight of those sort of some of those bigger strategic concerns. And so that's what we've sort of developed currently, a table of strategic concerns. We might have a better name at some point, but that's what it is at the moment. What we now need to do is get everything in place and everything working so that we can start to inform and sort of challenge some of our thinking about those things. At the moment, the version that you've got in front of you of each of those documents has still been sort of produced by my discussions with directors and with the executive board. What we need to now know is that information is starting to come up through the organisation that starts to challenge some of that thinking or provides better assurance. So that's what we've got. I wasn't going to sort of say much more than that, but that's really what this paper is trying to set out.
Thank you, Peter. I think that's a very comprehensive summary of a very comprehensive report. Well, any comments, observations from members? Yes.
Have you got any timescale for when you're actually looking to actually implement that?
It is being implemented now. I'm in discussion with a number of sort of different people to try and sort of fill in some of those governance levels. Some are already being done. I think I gave a mention of one, the technical governance panel is sort of up and running, and that hopefully can start to sort of inform out those information security risks that we've got. We've now got a sort of panel that's drawing information and able to sort of provide some assurance or challenge around those. But I'm also in discussions with the new director of portfolio management office, so our new director of the PMO, also the strategy director as well. So that will give us sort of a better way of plugging into some of those sort of delivery and strategy concerns.
Councillor Goodall.
Again, this is just a question and observation. Have you given any thought to the role of appointing a risk champion on behalf of the complaint authority, either or at a senior level, to create the critical voice you need to manage risk?
There's probably a number of ways to try and sort of tackle that as an issue. I'd like to say I think that I'm moved. We've had a bit of a transformation ourselves, and I've now moved into the sort of legal and governance area from the team I was in sort of previously. I think that being able to work closer to sort of legal and governance colleagues and within the audit team I work to Matt, I think that probably helps to sort of provide some of that sort of championing of risk management anyway. But I also think that transformation generally, I've already mentioned a couple of those sort of bodies, so the PMO and the Director of Strategy, I think that engaging with them also will help to sort of perhaps transform some of our approach to risk management as well. I don't know if you had anything further to say on that.
Yeah, again, I think it's a good question. We are on a journey in terms of risk management, but I would say actually that Peter is that risk champion within the organisation, and actually enabling that engagement with new internal governance panels, which have been devised as part of the transformation programme, I think will really embed risk within the organisation and this enterprise risk management approach throughout all levels of the organisation, both from operational delivery risks all the way up to strategic risks within the corporate risk register. So I would say that person is Peter.
I only mention it, Chair, because and it might be a lesson learned from local authority, and I'll take it back to the business I work for. The idea of strategic risk champion, which sits outside the officer structure, is actually quite powerful, because it creates a bit of distance and a bit of oversight for both elected executives and also officers. Also, to a certain extent, a risk champion can voice some of the concerns that maybe an officer can't. I'm not suggesting it would work here, but certainly for our authority, it happens to be an elected member in our authority who's our risk champion. It doesn't have to be an elected member, but in terms of giving you a critical friend or an external voice on the board, a bit like a non-exec director of a company, has worked quite well for us. And I'll just leave that as an observation for you guys to consider.
Thank you. I think we will do.
Okay, thank you. Anything further on this report? What's to note? So we will duly note the report. The next report is the assurance performance report. Helen, are you taking that?
I am, yes, Chair. Thank you, Jody Shaw, on the report that has been able to join us this morning, but we hope I'm pleased to say has joined us to deal with any technical questions that might arise. But just to give you an overview, this is a report just for noting. It's to give detail, and there is a lot of detail, I appreciate that, into assurance around the projects that have been assured through the staff phase. It is a lot of data in there, which shows the sheer volume of projects that are going through this team. It's an incredibly busy team, and there's quite a lot of detailed breakdown there around business cases that they're dealing with on each quarterly basis, and the requests and whether the assurance and appraisal reviews. I think the report probably speaks for itself. I am aware there is a lot of numbers and it is very data rich, but if I just open it up for lots of questions that either Julia or I might be able to help with.
Any questions for officers? I spoke to Jody yesterday, just an observation really, more than a question. There is a lot of detail in here, and I'm just not 100% clear of the assurance it's providing for the audit committee. That's the purpose of the report, isn't it? When I read it twice, and I had to go back and think, what is it actually telling me? So I wonder whether the covering report can just be a bit clearer. Is we providing 100%? I don't mind the detail, I like detail, but the covering report, if it can just be a bit more clear, it's given assurance that all the grant conditions have been complied with and there are no risks. I'm just thinking if there is, when I spoke to Jody, for instance, if there is any clawback on any of the grants where the conditions haven't been met, I'm not sure the assurance in this report is sufficient for us to say that the audit committee got that assurance. It's just presentation really, nothing else. Jody also told me that the requirements have changed, so the report probably will look different next time anyway. I think just from my personal point of view, coming new into it, I just would like the assurance to be a bit clearer, and also if there are any areas at all where there isn't full assurance, that could be around grant conditions, or it could be around the way we're reporting information and collecting information. If that can be pulled out specifically in the report, that will be enormously helpful. Thank you.
I think the focus that Jody has had has been, because there have been such a churn and such an increase in the amount of work coming through this team, I think she's been very keen to articulate that so it's clear to everyone that there is probably pressure on that team, and there may well, if it continues like this is another area that might need more resource. I'm afraid that appears to be a trend at the moment in all of these areas. But again, this is another area that moved into my directorate in August, and I know Jyoti and her team are working very closely with Julia Cleary as our head of governance to look at a fresh pair of eyes as to whether things can be done differently and presented differently, and whether there might be different ways of actually getting the information across. But I don't know whether Julie wants to add anything. Point of view from the team.
Yeah, I think you've summarised it well. Yeah, it's been in existence for a while, this format, and I think the general purpose was to demonstrate compliance with HM Treasury Green Book, and the team are driving that continuous improvement in terms of business case development and maturity. Help then with the delivery of successful projects. Yeah, I'll take on board that.
Yeah. Excellent, thank you very much. Any further comments, questions, observations? Yes?
Seeing as the number of businesses who receive single assurance framework, and it's only about 22. I'm just curious, is that the sort of average amount of businesses who receive that kind of funding from the WAMC, or have I misunderstood this completely? So, it's on page 80.
So I think the last quarter, the number of business cases had significantly increased compared to previous quarters.
Okay.
So yes, it's been a really busy period because the amount of activity and the amount of funds that we're receiving, and project then trying to get
So that's quite a good number then. So.
Yeah.
Okay.
Yeah.
Thank you very much. Very helpful. And that is to note, isn't it? That report is to note. Yeah. So to note this. And the next agenda item is the Treasury Management mid-year report. I think Mark knows that I am particularly interested in Treasury Management, and I think Mark also knows that I would particularly like this report. So over to you, Mark.
So the report before committee today is the Treasury Management mid-year report for financial year 25-26. It's been prepared in compliance with CIPFA's Code of Practice on Treasury Management Services, and contains a review of our investment portfolio, review of our borrowing strategy, debt rescheduling that took place in the year, and compliance with our prudential and treasury limits for the year as well. I won't go into too much detail. I think there's probably 3 points that I wanted to bring out. The change in net investments between April and September of 323.14 million, mostly related to the receipt of our integrated settlement cash award in April of the year. So it's a very large award that we got in April, and obviously reflected in the increase in our balances. I also wanted to draw out the early repayment we made of some PWLB loans in October, so slightly outside the period for the coverage of this report, but I thought it merited inclusion at that point in time, where we repaid £21.8 million worth of PWLB loans at a discount of £3.435 million. So in effect, we're paying £21.8 million for £17 million or so. And finally, just to note our investment returns for the period as well, which are 9.4 million surplus above the budgeted estimate we made for the beginning of the year. The reasoning behind that, again, integrated settlement plays a large part in that. When we were setting our budget, we were unaware of the final quantum of integrated settlement, how large the grant would be, and also more particularly because we weren't aware at that point in time when government would grant the cash to us, and they granted it to us at the beginning of the year rather than in stages through the year. So we've had the ability to earn interest on that cash for a longer period of time. I think that's all I'll say at this moment in time. Questions?
Thank you, Mark. Very helpful. Any questions for Mark? Yes.
I suppose it's more just I suppose your general opinion. I remember I was at the committee when President Trump put all his tariffs up, and we were all wondering how the combined authority would cope with that kind of stuff. And I suppose, and there was a good amount of reassurance there. I suppose in a similar way, there's all these jitters on the stock market from my understanding. I'm not an expert. I just read the news every now and then, but I know there's all this there's sort of a bit of a downturn at the moment, and there's a bit of like flux. So how well would you think the employment authority would do if, say, things turn south, I suppose?
So we present a forecast from our advisors at the end of the report with regard to interest rate prospects going forward. As members are probably aware, the Bank of England has cut rates a little during the course of this financial year, perhaps a little less than was anticipated originally, because inflation in the economy has been perhaps more sticky than anticipated. The forecast is that rates will still fall further into next financial year, perhaps down as far as 3.5%. So our earnings will obviously be impacted by that. But there are you're quite right in saying that there are other elements in the economy that are volatile, particularly, say, for example, gilt yields have been very volatile throughout the course of the year and have a direct impact upon PWLB rates if we were choosing to borrow. Thankfully, as an authority at this moment in time, we have sufficient cash resources that we don't need to go to market to borrow. But yes, there is volatility within the economy.
Any further comments, questions?
Just clarification on, I'm tempted, Chair, slightly to ask on this one. This on page 86, the former Westmoreland County Council debt. How is carrying on? I'm just struggling with it to understand how long will it carry on and how it's being managed.
Happy to inform you that this is the final year.
All right, okay.
Debt repayments, and at the end of this financial year, it will be extinguished.
All right.
Thank you. I think it's an excellent report and well done, Mark. It's a lot of skill and expertise goes into this, and debt rescheduling at the discount. That's fantastic. So well done. Good report. Thank you very much. Now we're going into